Welcome to Barchart series of webinars designed to enlighten you on a variety of investing and trading ideas. Demonstrate the features and tools Barchart provides related to these concepts and offer some traders insight to help you make a more informed trading decision. Today's subject, unlock high probability trade setups, mastering fractals and time frames like a pro. What if I told you that the most traders don't lose because they're wrong? They lose because they're out of sync. And in trading, timing is everything. And if you only are looking at a single chart, then you're flying blind. Think of like planning a road trip. Before you hit the highway, you're going to check the big map. What cities will I pass through? Where will weather impact my travel? And when might traffic slow me down? That's your higher time frame. But once you're driving, you rely on your turn-by-turn navigation, you're watching for exits, stop signs, and last-minute detours. That's your lower time frame. Without both views, you either miss the big picture or the critical details. And that's why today we're going to explore multiple time frame analysis, a method that gains clarity at every level. Whether you're trading stocks, options, or futures, this approach aligns your strategy with the market's rhyme and gives you the edge most traders never seen or think about. Hello, everyone. My name is John Rowland, Barchart's senior market strategist. And, over the years, I've learned that successful trading requires more than just pattern recognition. It requires time structure. And markets move in repeating patterns across different time frames, just like in nature. A coastline might look jagged from the sky, but it still is jagged when you're looking at the rocks on a beach. That's called a fractal. In trading, a strong uptrend on a weekly chart can contain smaller and tradable pullbacks on a daily chart, or even tighter setups on an intraday chart. Each time frame tells us part of the story. However, when you can see how they stack together, that's when things start to click. So stick around as I demonstrate this top-down alignment, broad concept, active trend, tactical entry or exit process, as it'll keep you on the right road and the right side of the market. Now, before we get to that, please welcome our moderator and Barchart's project director, Jean Baker. Hello, Jean.
Happy Wednesday, John.
Happy Wednesday.
Yeah, how are you doing?
I'm doing great. And yourself?
I'm good, thank you. Thank you.
Did you have a nice holiday weekend?
Oh, we had a busy weekend. It had to have the Easter egg hunt inside because it was pouring rain and the kiddos were going crazy, but we had a good time. How about you?
Yeah, well, we did ours outside. We had a beautiful day. It was in the 70s or 80s. I can't remember. It was gorgeous. But yeah, again, the kids were running around like chickens with their heads cut off. It was fun.
Yeah.
It's fun. All right, Gene. Well, spring is here. Let's spring into action today, all right?
That sounds good.
Okay. Just remind folks today that today's session is for educational purposes only, and decisions to buy, sell, hold, or trade securities or commodities or any other investment involve risk and best made on the advice of a qualified financial professional. Under no circumstances shall we be liable for any damages or losses that you incur based on some trading activity that you already once engages in based on information or material you receive through barchart.com and our services. Okay, so what is the methodology of multiple time frame analysis and fractal recognition? Well, it's a process of drilling down from a higher time frame to a lower. Each time frame has a purpose. The higher time frame gives us a big picture perspective, be it monthly or weeklies for investors or swing traders, to daily or multiple hours for day traders. The purpose is identifying the playing field of probability. In other words, where has price been? Where can it go? Where is the path of least resistance? Where is price at risk? The higher time frame gives us permission to set the table for trading action. The intermediate time frame identifies the directional bias, trend's your friend, and our market structure, as in an uptrend is a series of higher highs and higher lows with impulses and corrections connecting the two. We're going to identify swing highs and swing lows, and this is going to allow us to find out where price is positioned or its positioning in our trends. And this is going to help us to filter out the strategies that is most appropriate, be it momentum, breakout, or mean reversion. Also in that timing aspect, in other words, what are we going to do? Is my trade action going to be a wait and waiting for a better setup? Or am I going to go with the flow, the trend? The intermediate time frame gives us the setup. So let's start with our highest time frame or our higher time frame. And what is the purpose of that? Well, it is to identify our primary trend. So if we're looking at a chart, then we want to see what price action is doing from left to right. What is the current price direction and that location? So the higher time frame isn't just all about trend, it's also about that institutional narrative, the path of least resistance. Where is price? Is it near support or resistance, or is it in the mid of the range? Is price at risk, or is there room to run? Think about it in terms of probability, or should I say more likely, where would institutionals, or if I was an institutional trader, where would I buy? Where would I sell? And so there are some tools that we can use to help us identify primary trends and price positioning. So one of the easiest tools for us is just using a simple moving average. Now, in this example here, I'm talking about a 200-day moving average or a 40-week moving average. And again, what I'm going to do is I'm going to take the tack today from in the middle of the road, a swing trader, not a day trader and not an investor, but somebody who is going to take a position and hold it for several days or maybe several weeks. So our analysis here, a simple moving average, let's say a 20-day moving average, a 200-day moving average, and for instance, our 40-week, they're kind of equivalent. But also when we think about moving averages, is price above or below the average? Is the average upsloping or downsloping? And what is the relationship of averages to each other? That could be critical in helping us figuring out our prime trend. ADX. So ADX is a tool we can use, average directional index it stands for confirmation and strength of trend. And I'm going to go through a really good example with you in a little bit. MACDs are moving average convergence divergence. We're going to use this for trend momentum. So yeah, I'm not going to be so concerned about MACD signals like crossovers. I'm more about using MACD about confirming my trend. And Bollinger Bands. Bollinger Bands are a measurement of volatility. They tell us if the market is in a low volatility period or a high volatility period. But the bands themselves and the mean will help us locate zones of actions. So let's go to a common stock. This is a NVIDIA. So I think most folks have heard of this one. And so I'm on a weekly chart here. And again, what I want to first do is I want to just kind of identify what is happening from left to right? Well, if we look from left to right, we can make an argument here that we are in an uptrend. And an uptrend is defined by higher highs and higher lows. And certainly that's what it looks like at the moment. But we also want to know what is our actionable trend, or what is going on currently. What is price doing? Well, price is falling. And then we also want to start locating our swing highs and our swing lows that are relative to our current price action. And when I look at this, I say, okay, well, where do I feel like there is, speed bumps to my mark? In other words, where is there resistance above and support below? Where is there wood to be chopped? And what is the path of least resistance? So in this case, I think we can make an argument that the market is still moving lower. There is some support just below here, but a failure to hold, let's say, this area, or let's say 75, there would be a lot more room for the market to run. But we are on the low end of this range, this corrective price action in our primary trend. And so there could be room for it to run back to, let's say, the middle of the range, or maybe even towards the upper end of the range. And that's why we can use things like Bollinger Bands to help us with that probability. So I'm going to go to my indicators here, and here it says Bollinger Bands that overlay. So I'm going to add them to our weekly. Let's make this weekly only a 1 year period so we can kind of see that. And so the technique we're going to do here is we're going to draw some simple lines. And, I can see my upper band is in line with my higher swing. So I'm not really worried about that. I'm going to draw a line here at my mean. And then, we do have our lower band, which is going to give us this probability of support. So I'm going to right click here. This is a little trick for you. Right click, and I'm going to duplicate this line. And I'm going to drag this up to here. So now what I see here is in the range of probability in this higher time frame, we're still trending lower, but we're at the lower end of what would be a trading range or a probability range. So that could mean that I might find some buying opportunities, or if I'm looking for a selling opportunity, probably need to be a little bit more patient. Now, again, we said we could look at a moving average, right? So let's add a moving average. And since this is on a weekly chart, one of the ones that I like to look at is a 40 period or 40 weekly moving average. And what do we see here? Well, again, our moving average, here's that idea that our primary trend has been up, but our actionable trend right now looks like price has fallen below the moving average, and our moving average has turned from upsloping to probably, I would say, flat to maybe slightly downsloping. So the bias now is to the downside. And then to confirm that, I'm going to look at ADX. Average Directional Index. Now, I'm going to make this real simple. You're going to have boiled down this technical analysis tool if you're not familiar with it. So there's three components. There's the DIs, the positive and negative DIs, and there's the ADX. Now, the DIs represent the portion of current price range that is outside of the previous price range. In other words, if we are outside of yesterday's high or outside of yesterday's lows, that will determine if we have a positive or a negative DI. And we'll add these up to give us a value. Now, the ADX is a EMA, or an exponential moving average. Now, this is the absolute value of the difference between the two DIs. In other words, there's never a negative number. It's always a positive number. But if we have a negative DI that is larger than a positive DI, that would indicate a downtrend, but the ADX will be a positive value. It's basically going to show us who is winning that battle, those up and down battles. Now, again, I'm not concerned with signals or crossover signals. I'm only using ADX here as a trend identifier or a strength of an existing trend. Now, Wells Wilder, the creator of the ADX, goes on to tell us that in terms of confirming a trend, he likes to see the DI line above 25 and the ADX above 20. Now, if I add this to our chart, what I see here is our purple, which represents our negative DI, is running around 32. That is above 25. That's confirming to us that we are in a downtrend. Our ADX is at 23 or 23.6. Again, above 20 and is upsloping. Both of these are upsloping. So again, what we're seeing here in the weekly here is a confirmation that we're in a downtrend. All right. So intermediate time frame. Well, this is going to be our trading time frame. This is our trend of action, or I like to call it my trend of tactics. If this, then that. But also, this is going to be a time frame that we're going to use to help us assess risk. In other words, where am I wrong? When is the trend at the bend at the end, so to speak? Now, the main purpose is to identify actionable areas with our actionable trend. In other words, that tactical strategy. What am I going to look to do? What is the setup that I'm hoping that the market is going to present to myself? Now, those could be trend confirming or breakouts on those different occasions. So again, some of the tools that I'm going to look at this level. Again, I've already discussed the ADX and our Bollinger Bands. Actually, you know what? We'll go back to the Bollinger Bands in a second on our chart. We're going to present an idea which is called the average true range. And this is a measuring stick of probability. It helps us determine how far price can move on any given time period. Now we're going to focus on a daily, but depending on what time frame you use for your trend time frame, what we're going to do is we're going to obtain the ATR from that trend time frame, and then we're going to apply it to our lower time frame. Now, MACDs, we're going to use this now as more of a momentum of trend, and we're going to look at buy and sell signals. Now, in the beginning, when we were looking at higher time frames, our MACDs were more of just kind of confirming the momentum of our trend. But we're also going to look at those buy and sell signals. Now, when I mean buy or sell signals from MACDs, we're talking about potential crossovers of our from crossovers in our MACDs, crossovers in our zero lines, in those classical terms of a MACD. Moving averages, again, I think when we look at this intermediate time frame, it's really important for us to look at some of the more classical moving averages. Again, here at the daily time frame, I'm talking about the 20, 50, and 200 day. Those are more of your classicals. But you might have a time frame that you like or a moving average that you like. And personally, in my world, I like to use the 13 EMA. I like it in intermediate time frames, I like it in lower time frames, and I like it in higher time frames. So it kind of expands all time frames for me. So let's go back let's see. Oh, excuse me, RSIs. We'll look at RSIs in terms of overbought and oversold conditions, not necessarily a signal. I'm just waiting for the market to give me those conditions. What I might do is wait for the signal in the lower time frame. And then stochastics. Some of you are fans of stochastics. Well, in the intermediate time frame, let's look at stochastics from a contra or a counter to trend signal. In other words, I'm going to look for oversold conditions in the stochastics in an uptrend environment. These were going to give us much higher probable trades. All right, so let's go back to our chart here, and let me clean this up a little bit. Let's do this. Let's go down to 1 year again. Okay. So here's again, we're on a weekly chart, but let's change our time frame again. I'm going to go down to a daily, and notice that well, excuse me, let me go back to weekly. I forgot to do this with you guys. So we have our yellow lines. Again, these represent this range of probability based on the Bollinger Bands. Again, the upper ones was our swing high and swing lows. The inner ones are our Bollinger Bands. So let's go down to our lower time frame now, or our intermediate time frame. Here's our daily. Here's our ADX on the bottom. So what do we see here? Well, we do see that our DI line and our ADX are both above 25, but what they are doing is they're kind of going sideways, or actually maybe even trending a little bit lower. Now, it's still telling us, it's confirming to us that we are in a downtrend, but maybe our downtrend is weakening a little bit. Not something to be concerned about, but just an observation. So now let's go back to our Bollinger Bands. Again, I'm going to look at where my outer bands are in terms of that range of probability. Notice that our outer band here is a little bit lower from where our mean of our weekly. So we can lower that. And our outer band for our daily is actually below the lower band of our weekly. So let's leave that there. But what we probably need to do is add another line at our mean and for our daily. And this is where in Bollinger Bands, our means can be actionable areas. In other words, I'm not going to be concerned about all the noise that happens between the market in these ranges. I'm more concerned about, or I'm going to be more interested in when price reaches these golden lines. And so in a mean could be a potential crossover from outer band to outer band, or means can also be levels of support or resistance. In this case, it seems to me it's probably acting more like a level of resistance. Now, the other thing we can look at is, again, our moving averages. So under our templates here, if I go to Barchart templates, let's go to, here is our RSI plus our 50, 100, and 200-day moving averages. Again, what we're kind of just doing here is we're just eyeballing or trying to get an idea of what we see. Well, what we see here is that our 50 is downsloping, our 200-day is downsloping, our 100-day is downsloping, and price is below our averages. Now, what we can maybe estimate or anticipate is that if we are looking at a mean reversion, then we could see price rally as high as, in this case, as high as 116.20. But let's add one more moving average. Again, and one of the ones that I like is that 13. And this is kind of going to give you that momentum, right? And what do I see here? Again, another downsloping moving average, but price has re-engaged it. So is this ready to break out to the upside or break down, meet resistance and break down? And so that's where lower time frame helps us with this analogy or this process. So lowest time frame. So what is the lowest time frame going to do? Well, as far as the trading purposes, it's only applicable for us when we're on the day of action. In other words, if I'm a swing trader, I'm waiting for price to get to those golden lines, those areas of action. And up until then, I don't really care what's happening in the lower time frame. But on the day that I'm going to take a position, or the day I'm going to take off a position, then I'm going to use the lower time frames to help me not only find greater entries and exits, but also to help me to calibrate my risk. So once that broader context, that trend is clear, I'm going to drop down to that lower time frame to help me find those entries and exits, and also to help me to manage my risk. And if I can lower my risk, well, ultimately that will increase my potential reward. So some of the studies that we can look for is, again, we're going to look at RSIs and MACDs, but let's think about those buy and sell signals. Now, again, these could be crossovers. For instance, in the RSI, we're going to forego that momentum assessment because we've already done that at the higher time frame. And a lot of times what we'll probably notice is that if I looked at momentum, I might get a momentum that is actually counter to my trend. And that's okay. That's what we want. We want price to be coming to us, right? I don't want to really focus on that lower time frame momentum. I really want to focus on the signals. So post conditions, in other words, from going from an overbought condition to giving me a sell signal, or an oversold condition to give me a buy signal, or looking in, for instance, like MACDs, looking for those crossovers. Now, I'm only going to look for those signals that are aligned with our intermediate and higher time frames. Now, a great example with this would be, I see a MACD crossover that indicates bullish momentum, but that would only be a good signal with a daily uptrend. Now we're going to look at 13 EMAs in an intraday time frame of 30 minutes. Again, this drop-down process for instance, for a swing trader. And Barchart has a template that we can use at this intermediate time frame that will help us find momentum. It'll help us identify levels of price that can be used for actionable entries and exits. It's going to also help us manage our risk in those zones of action. And then what we're going to do is we're going to align them with our average true range, our price range probability. Again, here what I'm talking about is I'm going to use my daily ATR to align with my intraday zones. And this is going to look at, we're going to look at this kind of this price discovery of probability. And that bar chart template tool is going to give us one more piece of information, and that is floor trader pivots, which help us find levels of support and resistance. And what is amazing is when you start doing this process on a regular basis, you're also going to find how they align with your ATRs. So the lower time frame gives us entry and exits, and that's not from guessing to find entries and exits, but from precision and confidence, and that's important for us. All right, so let's do this. Let's go back to our NVIDIA chart here. Now, before I go down to a lower time frame, what I want to show you is up here under technical analysis. If I open that up, you can see where you can find the average true range. Now, we offered a lot of different average true range, and folks are going to ask which one is the better of the one to use. Again, I think it's more a perspective of your time frame analysis, but I think the 9, 14, and 20 is probably where you want to be. I would be looking to see if the average true range is expanding or decreasing in terms of volatility. In this case, you can see for NVIDIA, it's just a little bit more than $7 in all of these time frames. So just remember that $7, okay? So I'm going to go back to my templates here, bar chart templates right there, and scroll down a little bit. And here it says 13 EMA in pivots. Now I'm going to open this up. And this is going to give you a 30-minute time frame chart over a 5-day period. Inside of this chart, you're also going to get a 13 exponential moving average. Now, in a regular trading day for the equities markets, there's 13 30-minute periods in a regular trading day. But what you'll see is this has an uncanny ability to kind of show you the momentum of the market. But not only does it show you the momentum, but when price engages the EM, as you can see here, can act as a level of resistance or support, resistance. And when price crosses over, it's telling you there's a change in momentum. So you can use this also as a risk assessment. The other thing we get is what we call our floor traders pivots. And these are based on yesterday's price action, and they're going to give you levels of support and resistance. In this case, pink above is resistance and blue below is support. So how do we kind of use this? Well, what we're going to do here is I've now done my higher time frame analysis. I know I'm in a downtrend. Price is now moving towards my mean, moving towards my actionable area. There you can see that golden line. And I'm going to be looking for an opportunity to sell. Now notice that for today, we ran right to that pivot resistance. Now, remember that ATR we looked at and that value of $7? Well, that value could be based on a range of price, either from yesterday's previous close to the high of today, or it could be yesterday's previous close to the low of today, or it could be the range of price for today, whichever is greater. That's how ATR is calculated. But you can see that for today, right now, we're up about $5. If I take the previous day's close, which was 98.86, and I add $7, that gives me 105.86. Well, look where our actionable line is, 105.78. So this would tell me that if I was looking for a selling opportunity, this would be a great selling opportunity somewhere between this pivot and my line of action, because both of them are at the extreme end of our ATR. Now, the other thing that I can do is if I take this short here, well, I can use the third level of resistance as a potential risk assessment, right? In other words, where am I wrong? And also I can start thinking about this if I'm a day trader in terms of a potential targets. Again, probably not going to take the trade from here. I might wait for a confirmational signal. Well, what are some of the tools we said we could use for a confirmational signal? Well, RSI and MACDs. And so notice today the RSI got very close to overbought. Now, it didn't get in there, but just barely touched in there. But what would be the signal? Well, if it got into the overbought and fell out, that would be the sell signal. And we did kind of see that happen here. So again, my entry might be a little bit lower as I'm waiting for that ideal signal. Okay. So let's go back to our slides for a moment. All right, so now we've looked at this concept of drilling down from higher to lower, and we looked at some different tools we can use to help us define trend and potential opportunities. But there's one other thing that we can start to think about, and that is called fractals. And then this is where we're going to incorporate fractals into our multiple time frame analysis. So how do we do that? Well, market is fractal in nature. In other words, price structures and price behaviors and patterns repeat across all time frames. And so what happens is, let's say on a 15-minute chart, you often see how it mirrors what is playing out on a daily or a weekly chart, just at different scales. So for instance, if I found a strong trending market with a strengthening momentum, then I guarantee you that at the lower time frame, you'll be able to locate a breakout trade or an impulse. Remember market structure, an impulse from low to high. And this is mimicking the trend of our intermediate and our higher time price action. Support and resistance, trends and breakouts, right, aren't isolated to a single time frame. They echo throughout all time frames. So support and resistance of an intermediate time frame or a higher time frame influences the support and resistance of lower time frames. But a bullish breakout in a lower time frame carries more weight if the higher time frame is at a support level or the intermediate time frame is in an uptrend. And recognition that fractal behavior helps traders spot early signals that are in line with more significant structures. Again, that patience of waiting for the lower time frame to give us the signal in the actionable area. What we don't want to do is we don't want to force trades. We want to wait for those key conditions to resonate throughout all time frames. All right, so let's go to Amazon for a second here, and let's kind of walk through this together. But I'm going to show you another feature that I think is really important for us to use. So again, here are our weekly time frame. Again, I think it's we can make that case. It's very similar to what we saw in NVIDIA. Again, from left to right, certainly we see an uptrend, but recent price action has fallen. Again, we could look at potential moving averages to help us with our assessment. So again, here's a weekly. Let's look at the 40. Again, there's our uptrend. Now price is below it. We can make the argument that we've broken the uptrend. At least the uptrend is over. Maybe we're in a sideways action here, but we still have yet to make a new lower low. So the risk to the market is below this low. The mean reversion is somewhere up here. And then I could do the same. I could go down to a weekly, daily time frame. Again, maybe I might modify my moving average to say something a little bit smaller. Let's say 20 periods. Again, we are getting more of a mean reversion here, all right, against our range of price. We're in the lower end of the range of price. Again, I can use my Bollinger Bands to help me find that range of probability. right? So we are getting a mean reversion. That would have been an actionable area today for us in terms of a selling opportunity. Now, this is a feature that I want to kind of show you. And this is a new feature that we just recently brought out, and it's came from our development team, which has been led by Jean, and she's done an outstanding job. So thanks, Jean, on this as well. I might not present this as 100% well, but let's see what I can do to help you guys out on this. So if you come in where it says 1 by 1, what this is going to do for you guys is going to give you multiple grids or multiple charts on the same page. For instance, a 1 by 1 is one chart. A 1 by 2 is one row, two charts. 2 rows, one chart. 2 rows, three charts. 3 rows, two charts. So for instance, let's go to a 1 by 2, one row, two charts. And what we can do is here, this one is lit up. So this right now is on daily. And if I click on this one, see how it still says daily? Well, here I can change it to weekly. And this is a really nice tool because what we can do is if we have some technical analysis that we use, or we're using this to kind of get this big picture analysis, here we can look at two time frames at the same time. And this is really kind of important in part of our process. So what do we see? We see a mean reversion in the daily, which at the higher time frame says, well, yeah, we've definitely come inside the Bollinger Band, which means we could get a mean reversion up here. Well, that higher mean reversion on the weekly would more likely be in line with the outer band of the daily. So where is the price of risk now as we look at, well, it looks like the price of risk is to the upside, but inconsistent with our analysis of our downtrend. As long as price stays below our mean here on our daily time frame, well, we're probably going to continue in that trend direction. But where is the potential for that to stop? Well, at the lower end of the Bollinger Band, which also today coincides with our swing low. So that would be that chopping block or that resistance or that speed bump in the road that we'd have to keep in mind when we start doing risk assessments. Now, what you can do is after you set up these grid charts here, is like with any of our templates, you can save them and they will remember those settings. And once you have set up some grid templates that you've created, you can go into here where it says show grid templates. And that's exactly what I've done for today's demonstration. So here is that 1 by 2 where we are synced. And what I kind of do here is notice here that my 1 by 2 default is my lower time frame and my trend time frame. So again, now I can look for that fractal analysis. What do I see in this time frame? I see a downtrending market that looks like has had a mean reversion. What do I see in this time frame? Well, I see exactly the same thing. A downtrending market that has gone too far too fast and is now recoiling or coming back in a corrective mode. And then what I can also do here is, which is nice, is so here's my trend time frame, and then I can just jump up to, let's say, the higher time frame again to do that analysis. And then, we can do things like, for instance, here is an intraday for some of my day traders or swing traders who are looking for swing trades for, maybe only a couple days. So here I have 3 time frames. Here I have, let's say, a 30-minute, a 2-hour, and a daily. Where my daily is my higher time frame, and my 2-hour is my trend time frame, and the 30 is that lower time frame. And again, we look at this in terms of a fractal, right? What do we see? Well, we see a downtrending market, right? Downtrending market that has bounced and is now up against potential resistance. downtrending market that is bounced is up against potential resistance. So more likely a short trade than, for instance, a long trade today. Okay. So the last one I want to go through with you is once you start getting this idea of using the grid and the grid templates, we can do something like this, but let me change the symbol. Let's go to a new symbol. And this is Coca-Cola. And what I want to do is I want to blow this out so you guys can see this. And this is a 2x2. In other words, what I have is here are 4 time frames. And so let's start in the lower right-hand corner. So this is my weekly time frame, or excuse me, my monthly time frame. Again, this is more of my big picture. Oops, I actually turned off the price. And again, this is just going to give me that range of probability. Now, I've already taken the liberty of drawing some of the golden lines based on our Bollinger Bands and our higher time frames, swing highs and swing lows. But what do I see in terms of market structure here, right? An upsloping market, upsloping trend. And, what is this this candle? Well, that's sometimes referred to as a hammer. That's telling me there's upward buying pressure. Here's my weekly. And again, there's my weekly mean, and the blue line is my weekly moving average. And we're in the upper half of this Bollinger Band, but there's room for it to run, right? A lot of positive momentum, right? So now I'm thinking what, right? Potential breakout trade, or in this case, because we're looking at all-time highs, an all-time high trade. What's my trend saying? Well, again, my momentum here is still positive. We are above the 0 line. That is indicating an uptrend. Maybe I'm waiting for that crossover in our MACD, but you can see, our moving averages are well in line. Now, when I'm looking at this, though, what I'm thinking here is, yeah, I see a market that is moving higher, but maybe it's gone a little too far too fast. Maybe there's a better opportunity today would be look for a potential retracement or a correction. Or if I'm looking for a breakout, it seems to me like there's a lot more room for a market to run, but I have to get it a little bit higher. So here's my intraday time frame where we're using our pivots and our momentum. Now, again, before I go back, I'm going to go back for it. So I forgot to do this with you guys. Here's our ATR for Coca-Cola, right? It's around $1.60, $1.70. Let's say let's cut the difference, say $1.65. So let's look at what our RSI is doing in our intraday time frame, our lower time frame, right? See, the momentum is actually negative, right? It's falling. Well, that's a good thing for us because we want to buy this market, right? So what we might be waiting for is for an oversold condition, wait for the turn to give us that buy signal. Now, we might not get all the way down to oversold, but what I might wait for is the RSI to turn back positive and cross the 50 line. That is also a potential buy signal. But remember our RSI, 165. Well, here is our pivot. That's kind of in the middle of the road for today's range. And that is that block line. That's 73.65. If I minus 73.65 from 165, that would give us 72. Well, notice where our support on our pivot is 171.94. in line with our ATR. That would probably be a more desirable buy location today. But if I was thinking about a breakout trade, again, using ATR as my kind of my guide, yesterday's closing price was 72.75. If I added 165 to that, that would be 74.40, right? 74.40. Yep, I think that's the number. And where is our resistance? 74.63. So a breakout trade would need to get above our line of action and our intraday resistance. Okay. I see a few questions here. I think Gene's been answering a lot of them. So FinViz asks, do I use Heikin-Ashi? I don't always look at Heikin-Ashi, but I do like them as you mentioned, for trend. We do have a webinar on that one. So FinViz, check that out in our archives. Just type in Heikin-Ashi. You can watch that video. So the question is, if you have too many indicators, you get conflicting information. When do you trade then? Well, that's a great question. Well, if I'm getting conflicting information, right? When price is transitioning or I'm getting a lot of chop, well, this is telling me is that I should be limited in my exposure, or what I'm waiting for. And this is that fractal environment what we want to see is I want to wait for those conditions through all time frames, those setups to be clear in all time frames, or at least two of the three. And the two of the three that I want to make sure that I'm getting that signal from is from my trend time frame, right? So if I'm getting mixed signals through multiple time frames, let's say, for instance, my higher time frame is saying downtrend, my intermediate saying sideways to up, and my lower time frame is saying up, well, then I'm getting a lot of mixed signals. So that's telling me, hey, it's time to be patient and wait for a better opportunity. What we want to do is we want to stack those probabilities, right? We want to reduce the noise, right? Because once we reduce the noise, we increase the conviction. So great question there, Ben. Okay. Right, so I added a couple of slides here, and the slides are attached with today's webinar, and I like this slide because this is from John Murphy's book on technical analysis. And again, John Murphy doesn't really come out and talk about multiple time frame analysis, certainly doesn't talk about fractal analysis, but look at his process here and tell me if it doesn't have the same characteristics as multiple time frame analysis. In other words, you start at the big picture, right? And then you move your way down. Weekly and monthly is the roadmap of price, right? What's your trend? What's your intermediate time frame? Your trend in primary, intermediate, lower time frame. Where are your significant levels of support and resistance? Where are those lines of action, right? Channels, trend lines, moving averages, right? Gaps, chart patterns, price objectives, ATR, price objectives. And notice that technical analysis, right? And this really goes to what Finn is asking is technical analysis, MACDs, RSIs, ADXs, these are just secondary or tertiary enhancers to this top-down analysis. And so what I did was I also added a slide here on studies and tools. And again, this is kind of just a guideline for you. You can use them, the tools, as a way you see best. But here again, ADX, we're just going to use that to tell us to confirm a trend and the strength of the trend. Remember, 20 for the ADX and 25 for the DI. ATR, again, this is measurement of volatility, but also this measuring stick of where price can go in 1 day's time. Again, it could be from previous close to high or previous close to low, or it can be in terms of that intraday high to low. And remember, we're going to line those up with our pivots. Bollinger Bands, and then again, another tool for volatility, but those lines of action or those areas of action are going to be on our bands. Again, I'm going to be more concerned about our intermediate trend time frame and our higher time frame Bollinger Band, outer bands, and means than I am looking at, let's say, our lower time frame. And then again, you might have some moving averages that you like, and I just threw these in here at my intermediate time frame. I like looking at 9s and 13 EMAs. Again, I'm really kind of looking at these for strength of the trend. Is my EMA moving up? Is it moving down? Is price above or is it price below? And this kind of helps me with that momentum as well. A 20-day moving average is a great tool for actually looking for potential areas of action, or in other words, entries and exits at our intermediate time frame. 50-day could be a good level for using your stop placements. In other words, where am I wrong? 20-day, 200-day, that is more of our primary trend, right? The big picture. MACDs, again, MACDs, we're going to look at buy and sell signals in the low to intermediate time frames, but we're only going to concentrate on momentum and strength of trend in those higher and intermediate time frames. RSIs, again, we're not really looking for potential signals. We're just kind of looking for those conditions, right? Is the market overbought? Is the market oversold? Especially when those conditions align with our zones of action. And pivots, those intraday breakout entries, price reversion exits, and our risk management. In other words, if I'm entering into a trade and I'm looking at my intraday pivots, and for instance, that example, I'm looking for a buying opportunity that is at the outside of my average true range, where I'm getting the prices falling into my actionable zone, my longer term trend, my higher time frame trend, my intermediate time frame trend. Well, where am I wrong? Well, if I fall below that, let's say the next intraday support level, that could be my risk. Now think about this. I don't have to risk the whole ATR on an entry. I could, but if I only risk, let's say, a half or a third of the ATR based on what the pivots are designing for me, then if I get a positive movement, well, then I'm going to get a much greater risk to reward ratio. Again, I would say for risk to reward and risk assessment, I would always start risk assessment in my trend time frame. That is key as well. Don't just rely on those lower time frames to find those accuracy. They're just for calibration. Okay, let's quickly finish up here. So here's a trader's takeaway. So reliance on just one time frame or one technical analysis is a recipe for failure, right? The art of technical analysis encompasses multiple time frames. And this is where we're going to help to find those convergences and those cross trends, kind of what Finn was asking. Various technical analysis studies could be unique to the time frames that we're using, but what we want to look for is when they cluster together, right? We don't want that noise. We want them to come in sympathy, right? Think about like an orchestra, right? Orchestra is tuning up. There's a lot of noise. We want to hear when there's music, right? When there's evidence that aligns with our primary and intermediate time frames. That's going to give us greater confidence in probability of success. And then this fractal concept that markets just don't move in trends. right? What is a trend, right? A trend is just a directional movement, but trends are made of impulses and corrections, highs and lows, and they move in this fractal level. So we want to find when our fractals are in sync with our big picture and our micro trigger, our lower time frame entries. And this is going to help us to manage our risk a lot better and maximize our reward. I would actually add in this one is this idea of multiple time frame analysis and fractal recognition is more about keeping me out of trades than it is getting me into trades. I know that sounds kind of weird, but that's what I said in the opening. Most traders don't lose because they're wrong. They do a good job of figuring out what the trend is and where it is. It's their timing's off. They're out of sync with the markets, right? They're trying to buy into a downtrend. They're trying to sell into an uptrend, right? They're taking on they're taking on that risk, right? That headwind, right? I want to read the tape. I want to go with the tape. I don't want to go against the tape. I want to fight the tape. Okay, folks. Just to mind you again, some part of the process of being a Barchart member is a lot of the things that I showed you. If you're a subscribed member, you can it'll remember your settings and your templates, all those nice little features that we have available for you. So it's important. And again, you can try out our Premier and Plus packages for a 30-day free process. Okay, so next week under Barchart webinars, our upcoming webinar, we're going to look at value invested in philosophies. We're going to look at Benjamin Graham, Warren Buffett, John Bogle, and then we're going to compare them with something that's called the efficiency market hypotenuse, which basically just says that all information is discounted price. It discounts all information, but this has a difficulty explaining bubbles and crashes. So we're going to look at these gentlemen's style of investing, and then we're going to compare it to that EMH. And then at the end of the session, what I'm going to do is we have a screener that I've developed what looks at investing, value investing, and some matrices that we can screen for to look for some potential candidates in current market conditions for that. So again, I mentioned our archives. You can find any of our archive webinars here. You can just type in the subject or search by a keyword. Again, all of our sessions are on our YouTube page too as well. You can go and check them out. Until next time, folks, the best of health, manage your risk, and the good of all trading.